everyone's going to do the opposite, right? They know that this is the right thing to do, but yet they don't follow it. Why? They think that they can do better than the ETF, or they think they can do better than the overall stock market. So in my 20s, I felt invincible. I felt like I could do anything, and I didn't really want to listen to anybody in regards to personal finance or investing, and I thought that I could do better than all the hedge fund traders out there. But because I was young, I had nothing to lose. I chased things with the highest returns and the highest risk after all as well. So I did things like investing into Bitcoin, investing into Ethereum. So I lost quite a fair amount of money on that as well. And I also did a lot of day trading as well. I did leverage trading, where I was borrowing money to trade with a bigger size account. And then, long story short, I kind of lost a couple $1,000s in a few minutes. My Bitcoin investments played out quite well in the long run. It was really, really exciting because every day you could see your portfolio sort of increase like crazy. So I think based on a $10,000 investment, it kind of 10x'd over a good amount of years. And there were a lot of sleepless nights as well, because sometimes when you wake up and your portfolio can be up 20,000, down 20,000, and everything can be, so haywire, where it's just so difficult to sleep at night because your portfolio just changes so rapidly. And you can imagine I had so little money when I was in my 20s. Like 20,000 was all I have in my name. So when your portfolio jumps by your entire net worth of 20,000, you can just imagine how difficult it is to go to sleep, right? And also I had the perspective of, back then not having much money, I'm okay to risk everything, or even just risk half of it and go into the riskiest investments, because my thought process at that time was, if I lost everything, that's fine. If I go bankrupt, that's fine. I can just rebuild myself again. It's just $10,000, just $20,000. Nothing too crazy. It's still going to take me quite a long time because of my salary at that time, but it was doable, right? I can't possibly do something like that when I'm older, when I have 100k net worth, 200k net worth, and then I lose everything and I have to work all over again. No, it's not going to work that way, and I'm only going to be this age once, so let's just go all in for the riskiest kind of things. And that had its place in my time, but I'm not sure if I want to live my life that way all the time, right? Which is why I'm making this video on how my thoughts have changed over the years, and hopefully this can help some of you guys to really find that change. If it hasn't happened for you yet, hopefully that change comes for you soon, or maybe even after watching this video. And that's why when you are young, especially in the 20s, you can restart. But when you're in the 30s, the stakes kind of change quite a bit. This kind of happened to me a little bit more in my late 20s and a little bit in my early 30s, which is right now, where life looks a little bit different. It almost felt like I turned from a thrill seeker, an adrenaline junkie, someone who was riding roller coasters and everything, into somebody who is a little bit more mature, a little bit more older, I guess, and someone who craved a little bit more stability rather than the excitement. I still want good returns, that's for sure. Don't get me wrong, I'm still greedy for good returns, right? But I value my mental clarity and I value my sleep and stability a little bit more, rather than having to chase the riskiest investments. Because now I want my investments to grow consistently over time, but I want them to be safe enough and consistent enough that I can sleep at night without having to go through any emotional turmoil as I'm investing. Because I am going for bigger money right now, and let me explain what I mean by that. When you are in the 20s, you don't have much money, right? So the things that you're always going for is, can I turn this $1,000 into $10,000 or $5,000 into $20,000, something like that to that extent. So you're looking very short term as well. You're looking in terms of like weeks or months or even just hours, right? You want to quickly day trade yourself out of your job. But if you really look far, one of the things I've already thought about is my investing horizon has increased so much to maybe 20, 30, 40 years. But when I think about investing over this long period of time, and I'm investing so much more money, maybe I'm investing 100,000, 200,000, 300,000, then I'll be able to earn so much more money in the long run, projecting into like 3, 4, 5 million into the 20, 30 years. Then that's so much more money than just the 20, 30, 40,000 that you can maybe earn in the short term. Maybe if you are good at day trading, or if you're good at, trying to see what of these stocks are popping up, and then you get what I mean. The money is so little compared to the millions that you can earn if you just extend your horizon and invest for the long term. I've also been starting personal finance consultations on my channel, and one of the things that people are telling me, or people have been submitting these Google forms to me, is that people with high income jobs, especially people like me, one of the main things would be a lot of our income comes from this one source, right? Our job. So one of the fears is that, what if you lose your job one day, right? Retrenchments are very common in Singapore nowadays. You hear about Facebook, all the tech companies, they're kind of laying people off, and some of the other companies are also following suit. So what happens if your only income, your biggest income source is suddenly stopped? Then how are you going to change things, right? So of course, before that happens, hopefully you're putting in effort to replace that income, which is why I'm investing right now in hopes that I can slowly start to replace my day job income as much as possible, so that it makes my day job optional, and I can choose where I want to go to work, and I can go to work with a better peace of mind. The stakes are different as well, because last time you could reset, it was just you and everything was very, very easy to restart. But now there's so many different things. Let's use my context, for example. I have aging parents. My mom just retired a couple of months ago, so I have these things in my mind. She doesn't need me to support her financially or anything, and I just give her money every month. But it's just something that weighs on my mind, right? You won't be able to just quit your job and do whatever you want if you have parents who are retired at home. I'm also getting a resale HDB, or rather I'm getting married and getting my house with my girlfriend as well. So that's something that will come and weigh in on my decisions as well. I can't be so YOLO anymore. Some of you guys might even have kids, and you might even have to provide for them, or you will definitely have to provide for them, right? So you can't just make these YOLO decisions anymore, because now your decisions have real-time implications on people. And this is something that I only thought about when I got a bit older, was that last time I always used to think about, because I had very little things to lose, right? I always thought about what was the maximum upside that I can get from a particular risky trade or risky investment, right? Nowadays, even though I'm looking at the upside as well, I'm actually looking at the downside as well, which means what can I possibly lose from it? If I can lose $1,000 and I can earn $10,000, for example, then the risk to return in what we call the trading world is worth it, right? Then somebody will take that trade. But right now, a lot of the downsides as I'm doing some of these risky investments, it means my family goes to ruin. I won't be able to sleep. My entire family stability is really just gone, when I take any risky investments. So maybe an investment might be able to earn me $1 million, but I might lose $200,000, $300,000, $400,000, which would actually devastate my family in the meantime. Then it's definitely not worth it anymore to take a risk like that. So I would say, as you're reaching the 30s, as you have more things to lose, you need to look at the downsides and weigh whether that can you take that loss, rather than always just look at what you can earn in the meantime. I think that's really, really important, and that's really changed the way that I've invested, because now my investing sort of motto is that I'm investing for freedom, peace of mind, and mental clarity, which means I should be able to sleep very, very nicely at night. And my portfolio now consists of these 3 buckets. So the first main bucket is actually my cash reserves. I hold a enormously huge cash reserve compared to what I was from before. I was always that person who would invest every single dollar, make every single dollar work for me, other than the money that I have in my bank account for everyday expenses, which means I have very, very little money in my bank account in the past, and I invested everything else, right? So right now I'm doing the opposite. I actually find a lot of freedom in having a lot of cash reserves. So let me explain myself. I have a lot of cash reserves. Number one is because I have big ticket items coming up. So in your 30s, you have a lot of things to pay for, like your weddings, your house renovations, and just miscellaneous things that you have to pay for as you get married and settle down into a family and stuff like that, right? So of course you need to prepare a large sum of money, which is what I'm doing, right? On top of having that, I'm also finding a lot of merit in terms of saving more money. So if let's say I didn't even have any of these big ticket items, I will still save all this money, because I know that this money gives me flexibility and the option to choose certain things. So for example, if let's say I have $100K stored in my bank account, if today I felt like I'm sick, or I don't feel like going to work, or stuff like that, I can just stop working or quit, because I have money in my bank account, right? I have money to help me live my life without having to worry about losing my job, which funnily or ironically will help me to do my job better, because I'm going to work and I choose to go to work. The other very, very good thing about money that I've realized is that it gives you very, very good optionality in being able to capitalize on opportunities that might come along. So let's say I have about 20 to 30K in the bank account. Whenever I need to, I can sort of capitalize on market opportunities that happen. So for example, the tariff situation that happened in April, May, when the market suddenly dropped and it recovered like very, very quickly in like a week or so. So I had excess cash at that time, and I was able to invest like $20,000 into Nvidia. Of course, I wish I invested more money. Everybody says that they wish they invested more money whenever the recession comes, right? But it is what it is. I was able to invest like $20,000, and just a couple months later, I've already yielded like a 50% return from that investment itself, which is like $10,000, right? So as impressive as it is in terms of a percentage gain, if you're able to invest at the right time with the right amount of money, then you'll be able to earn so much more money, because the riches are made in the recessions and not in the bull markets and when everything is going well, right? The second portfolio acts as an insurance portfolio. So my second portfolio is actually the core portfolio, which is the S&P 500 investment, and it acts as the core foundational insurance for my portfolio, because this is the fast, free, long-term, just invest every single month portfolio, and it will just grow to the portfolio size of that few $1,000,000 that I want to in about 30 years time, or 30 to 35 years time, when I retire at 65 years old, for example. This gives me the mental clarity to be able to do anything else outside of doing this portfolio, which means that if this portfolio I'm able to just devote my capital, devote my time to it, which is very little time every month, just invest your money consistently, then I will have my retirement portfolio in this sort of pot settled, right? Then it acts very, very nicely. If I want to invest into other things, I can, but this is the main one that I should focus on. It's a bit like your insurance, right? You're buying health insurance, you're buying hospital insurance, you're making sure that you are taken care of if the worst thing happens, and then you can go out to do any other YOLO things that you want to, well, relatively, right? Don't be so YOLO anymore in your 30s, right? So it means that you can dabble into other things whenever you want to, without fear of them failing, right? That's how you become invincible in all your other investments or all the other pursuits. So if for example, I'm doing YouTube, right? If my YouTube fails, whatever, I still have my S&P 500 portfolio to really rely on when I grow older, and I don't have to worry about all these things. I can have all the leeway to go and pursue all the risky things like YouTube and everything else in terms of making money and trying to earn money in the future as well. The last portfolio is actually my options trading portfolio. So I have about a $70,000 or so options trading portfolio that I do every single month to kind of earn passive income. So this is my way of earning passive income, and I think a lot of people still have that day trading itch that they need to scratch, right? It's honestly very simple, right? Everyone's just telling you, just invest into a long-term broad-based index fund with low fees like the S&P 500, and then long-term wise you're going to be fine, right? But everyone's going to do the opposite, right? They know that this is the right thing to do, but yet they don't follow it. Why? Because they still have the itch, and they think that they can do better than the ETF, or they think they can do better than the overall stock market, which is retarded, but it is just human nature. So in order for me to balance these two out, I use the options trading portfolio to scratch my itch and use it. If I can earn money from it, great. If I can't, whatever it is. But my S&P 500 long-term portfolio still continues while I'm doing this day trading on the side, so that I can scratch both itches at the same time and still be able to not make big mistakes. So for you guys, what's the take-home message? Definitely have a long-term portfolio, but you can have a smaller portfolio where you can dabble into things, and if you want to take bets on companies that you think will 10x in the future, yeah, take those bets. Just don't make those bets as big as your S&P 500 portfolio, so that if in case you are wrong, then you're not losing the whole farm. You're not betting the whole farm on that one investment, right? But after talking about all these things about personal finance and investing, and you still find it super complicated, and you want somebody where you can just ask questions or really have a bit of a consultation or mentorship where they can guide you through what you should be doing during these periods of time and how you should be investing, then you might be interested to find out that I'm actually offering one-to-one consultations, and you can click the link down below in the description box. Hopefully this video has helped you guys in one way or another. It really highlights my journey from 20s all the way to 30s and what I'm doing right now. But hopefully it inspires you to start investing and also start doing something in your life that's worthwhile, and build your retirement portfolio, or build something that can earn you money in the future as well. If you enjoyed this video here, then you'll probably enjoy this video here. Thanks for watching, have an amazing day as usual, and I'll see you guys in the next few videos. Bye bye.